The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Happy Friday, everybody. Welcome to Squawk Box. I'm Steve Sedgwick with Carolyn Roth, and these are your headlines. A government shutdown looming over the United States after the House rejects an amended Republican bill with a deadline just hours away. The Dow eking out, you can't eat much more than 0.04%, can you? Anyway, eked out again, breaking its longest losing streak since 1974, as investors count down to today's pivotal PCE print.
The Japanese yen slows its decline as core inflation comes in hotter than expected, putting the central bank under more pressure to hike rates. Nike shares reverse gains as CEO Elliott Hill says the sports giant's turnaround plan will be an uphill battle while blaming deep discounts for declining revenue.
All those people who have headed to the Hamptons or Nantucket or the Alps or Jackson or wherever they go, all those lovely, or San Moritz, all the places where you're probably off to this afternoon, all those people who have gone,
spot on.
Have all, I know where you're off to, have missed the most exciting couple of days. There is so much going on in these markets. It's not like the damp squib to the end of the year, you know, no one's around, everyone just kind of flinging things around the office at each other. And that's most of the offices I've worked in my life, rather than the wonderful CNBC.
Here?
No, not here. It's all far too PC here. But yeah, all the old trading rooms where we're just chucking stuff at each other, and eating vast amounts of chocolate. But there is so much going on. We have spent the week so far where, you know, there's always these threats. You know, we climb this wall of worry. And by the way, good morning to you. I just have to get things off my chest. We always climb a wall of worry. There's always something to worry about. But at least three of the preeminent worries that are always there, that are always bubbling around, have come back to the fore in the last couple of days. One, people are beginning to worry about valuations and stocks like Nvidia, ergo the conversation we've had about all correction, always the rally over all that. Two, of course, this narrowing path that the Fed has got to get it right in the market's eye has been blatantly exposed by concerns about the hawkishness or supposed hawkishness of Powell and the SEP as well. So that's two threats, valuations and Federal Reserve policy. And now the third, which is what happens in Washington under a Trump presidency. Well, we thought we had to wait till January 20th. But what has become blatantly clear, first on a lot of foreign policy initiatives and certainly now on domestic spending, is that Trump is already in charge. Now, you might argue, actually, no, that's not true. Trump is not the president, in which case you're probably arguing that Musk is in charge, because you're certainly not arguing that Biden's in charge at the moment, because nobody is arguing that Biden is calling the shots. Are you? No, I thought not. So the point being here is that we've seen blatantly President-elect, we can always cross out the elect, really, let's be brutally honest about it. President Trump, 45 and soon to be 47, or currently 47, we're already there it seems as well, is calling all the shots already. And there are so many things that are clear here as well, is that straight away we are seeing strains within the Republican Party on Capitol Hill, let alone what the Democrats are up to.
Absolutely. There are so many things I want to sort of comment on, but let me
go for it. We've got 3 hours. No one else is going to talk. I can assure you. We've got Carmel Sharma. He'll come in a moment.
He'll talk a little bit. First, about the markets, this was probably a good thing. Some of the valuations, the frothiness has been taken out of the markets because we had such a big consensus trade on American exceptionalism and easier policy by the Fed. We still have that, but we're still 3%
away.
The
herd is fat, calling for 6.5 to 7 on the S&P.
But some of the frothiness has been taken out, and maybe that's a good thing.
Yeah.
There is always a risk on the day after the FOMC meeting because traditionally, historically, if you take a look at some of the reactions in the past, the market has a sort of a warp reaction. It doesn't quite know what to do with all the data, and exactly the case yesterday or the day prior. And what we're seeing now is a stabilization. Luckily, we've got another thing to worry about, and the looming shutdown. If this were to happen by midnight tonight, It wouldn't be the first time this happened, the 21st time, in fact, in U.S. history that this is going to happen. There could be some concerns.
2018, 35 days?
Yep. And it's happened under Trump. He's no stranger to that. But it does show you, it does highlight one thing, the difficulty of finding bipartisan agreement. He won't have to do that come March because the Congress is obviously all Republican. But the role of the House Speaker, Mike Johnson, I think, Steve, that's a really interesting one because there are already calls that he could be replaced with none other than Elon Musk. Imagine that.
Well, that's what...
That's
I think
one
that's
person.
No,
that's one person. But
let's
imagine
take a step
that.
back. Wasn't that what Marjorie Greene said as well?
Yes.
Yeah,
But imagine that. So there are
Musk
many
is
Republicans.
not an elected official. I don't believe he can step into the speaker. I don't know. Constitutionally, someone needs to tell me this, but I mean,
anything's possible. No?
I don't know if anything's possible, but I agree. I think the
going
role
to
of
be a
Elon Musk
leadership-
is absolutely at the centre of this.
There's going to be a leadership battle when it comes to the House Speaker come January. And there's so much revolt when it comes to the Republicans. Mike Johnson has really relied on bipartisan support, has found it really difficult to gather it this time around.
Well,
also, because
for his own part.
He is struggling with his own
bipartisan support
party.
is one thing, but when you have the majority, whether you're in the Senate or in the House, historically, by and large, it meant that you had sway over the agenda and over your own party. Now it's become increasingly clear that there are enormous divisions, as there are in the Democrat Party, and in the aftermath of the debacle of putting forward a presidential candidate who could beat Trump as well. But the fact of the matter is, I mean, when you see some of these comments, Republican Rosa DeLauro as well said there was a good agreement that was moving ahead, but for President Musk. That's a Republican. Republican Mike Lawler from New York, who just won re-election in the swing state, told MSN it is very clear that Donald Trump is in charge. So again, just pointing out the fact that Biden's not there as well. Plus, you've got Trump on Truth Social going hard at the House Representative Chip Roy. Chip Roy is just an ambitious guy with no talent. He's talking about one of his own party. And Chip Roy responding... basically just quite aggressively on this one as well over the spending levels and what have you. So you've got Republican on Republican. This is blue on blue. This isn't against the Democrats. Well, anyway, let's fill in the gaps and we'll get to our next guest. The House, the US, I beg your pardon, is hours away from a potential government shutdown after 38 Republicans and almost all Democrats voted down a last-minute Trump-backed bill to fund the government for 3 months and suspend the country's debt ceiling. We haven't even talked about that bit. That's extraordinary. For 2 years. The suspension was a late addition to the bill, demanded by President-elect Trump in a bid to avoid a dispute over the debt ceiling soon after he takes office, because it would extend it till March. Now, a previous bipartisan funding bill was dropped Wednesday after vocal criticism from Trump and Elon Musk. Elon Musk is incredibly powerful in America now. He already was. He's the richest man in America. Is he the most powerful man in America? Is that good for America? Some of you say yes, some of you say no. GOP leadership has not set out their next steps after the latest funding bill was defeated. With senior party figures, and Carrie, they're talking about Mike Johnson, a lot of the senior party figures are looking to pin the blame on the Democrats.
The only difference on this legislation was that we would push the debt ceiling to January of 2027. I want you all to remember that it was just last spring that the same Democrats berated Republicans and said that it was irresponsible to hold the debt limit, the debt ceiling hostage. What changed? It is, I think, really irresponsible for us to risk a shutdown over these issues on things that they have already agreed upon.
The Democrats just voted to shut down the government, even though we had a clean CR, because they didn't want to give the president negotiating leverage during his first term, or during the first year of his new term. They've asked for a shutdown, and I think that's exactly what they're going to get.
Speaking before the vote, House Minority Leader, that's Hakeem Jeffries, a Democrat, of course, hit out at Republican plans, calling on lawmakers to adopt the previously negotiated bipartisan funding proposal.
We are prepared to move forward with the bipartisan agreement that we thought was negotiated in good faith with House Republicans, along with Senate Democrats and Senate Republicans, that meets the needs of the American people at this moment in time. We are fighting for everyday Americans, not for millionaires and billionaires. We are fighting for everyday Americans who will be hurt by a reckless Republican shutdown.
President-elect Trump spoke to NBC News yesterday as he criticised the original funding proposal. Now, you've got to keep up with this because there's several funding proposals going on. Anyway, describing the debt ceiling as a meaningless concept and saying that the smartest move was for Congress, from Congress, would be to eliminate it entirely. I'm just going to say one more thing. Getting rid of a debt ceiling from a man who's promised to get down the debt so aggressively, it just seems there's something weird in my head here about this. If you're not going to have such aggressive debts because your plans are going to get rid of the debts, why are you worried about the debt ceiling? Speaking about the prospect of no deal being reached in Congress before tonight's deadline, Trump said, quote, if there's going to be a shutdown, we're going to start it with a Democratic president as well. So again, you've got the politics playing here. All the blame potentially, would it fall historically under a Biden administration? Caro, tell us about the markets.
So if you take a look at futures this morning, they're indicating a negative start to the trading session. No surprise with the looming shutdown, but want to remind you what happened in yesterday's trade. And we saw stabilization on the back of the sell-off the day prior on the back of the very hawkish Fed. The Dow Jones eking out a very modest gain here. The S&P 500 off by 0.1%. All eyes today, obviously, on that PCE report, the Fed's preferred inflation gauge. We're expecting a print of 0.2%. When it comes to the bond markets, we saw that continued sell-off and spike in yields. When it comes to the long end of the curve, we were seeing a print of 4.57%, a 7-month high. We're off those levels right now. We're currently looking at levels of 4.56%. But what we've also seen is a steepening of the curve, the steepest in about 2 years. Dollar is still very much king. It seems at a 2-year high when it comes to the dollar index. When it comes to some of the individual crosses, euro dollar changing hands at 103.48. Sterling was a really interesting one yesterday, wasn't it? Given the dovish tilt by the BOE, currently changing hands at 124.76. Also want to show you what's happening in the commodity space. WTI and Brent suffering from that very strong dollar. The WTI crude price currently sitting at 69.03, off by 0.5%. Spot gold just a touch higher here. And before I send it back over to Steve, the Asian markets very much taking their cues from the uncertainty around the world. The Nikkei 225 down by 0.2%. We saw the core inflation hotter than anticipated. The Hang Seng off by 0.1%. Steve.
I tell you, Karen, that exchange rate looks like pushing on an open door at the moment, but we'll ask our expert about that. US jobless claims, again, great data. US jobless claims fell more than expected last week, coming in at over 200,000, or 20,000 lower, at 220,000, whilst continuing claims, that's interesting, they actually fell as well. They've been slightly contraindicated at times. This, as broader economic data, painted a fairly rosy picture, didn't it, really, of the world's largest economy after Wednesday's hawkish commentary from the Fed. Final third quarter GDP was revised upwards, 3.1% from the original 2.8% figure. Elsewhere, investors looking ahead to one final piece of data final data release this year? Well, it's a key one, yes. Both broad and core PCE price growth expected to show an uptick in November. Kamal Sharma has joined us, G10 FX strategist at B of A. I don't know where to start. I've got so many questions for you.
Quiet start to the week. Yeah, very quiet
but
week.
I know that I was right about one thing. I'm wrong about 92% of stuff, I'm sure. But this is not the quiet end to the year that everyone had hoped for, that the people who have gone already would have hoped for. What is the biggest thing on your mind?
Morning, by the way. Happy Christmas,
Good morning,
everyone.
Sorry, I've already said lunch, so I forgot that we hadn't that on air. Good morning, Kamal Sharma.
Good morning, Steve. Well, look, this week has been very much dominated by two big events. The Fed, and obviously this evolving news about the potential shutdown. You mentioned earlier before I came on air about dollar exceptionalism. We are very much in this dollar exceptionalism environment. The Bank of Japan and the Fed have effectively bookended central banks this week. We've had a dovish tilt from the BOJ, Bank of England, as you quite rightly mentioned, and then the Fed have effectively gone all in on a hawkish outlook for next year. So they've removed a couple of cuts, pretty much in line with our expectations.
It's not getting to the same rate, though, in 2027. Still 3.125 by the end of this cycle.
Yeah. Again, the question is, how do we get there? The The markets now are expecting another 50 basis points of rate cuts. The question is, given the data that you just mentioned, is there a point at which the market starts saying, do they actually have to hike in between? And that's going to be...
This is the point I'm trying to make to our viewers. Then the stock market fell so aggressively on the back of this perceived hawkishness. I didn't think it was that hawkish. I thought it was quite realistic given everything you said. I didn't know what cognitive dissonance was going on elsewhere. That's a good thing for the US economy when they're growing better than expected, when they're losing less jobs, when the consumer is such a dominant factor, when the consumer represents 2.5% of 3% of GDP growth in the third quarter. It's a good thing.
But it's frothiness, right? It's about the valuation in the equity markets. We've come a very, very long way this year. And I think that's part of it. We're coming up to the end of the year, as you said, and that probably has persuaded some investors to take some risk off the table, reload into 2020, 2025. But historically, what you have seen is when you have a hawkish central bank, be it the Fed, be it the Bank of England, you tend to get yields higher, equities lower. It's a kind of a typical reaction that we're seeing. Nonetheless, the outlook next year, I think, is going to be a lot less certain. If you notice, all the central banks yesterday and this week have probably overemphasized that one word: uncertainty, uncertainty, uncertainty.
And how would you balance that? I'm just looking at the US dollar index rising to a 2-year high of 108.50. So as you pointed out correctly, there's currently positioning when it comes to the exceptionalism when it comes to US equities, but also the US dollar. But then you've got all this uncertainty when it comes to Trump policies, when it comes to the shutdown, when it comes to some of the inflationary policies and what that could do to growth. So what's your medium-term outlook here on the dollar? Or is it too hard to say right now?
I think, look, we've published a set of year-ahead reports earlier at the end of last month, and the basic conclusion here is that we expect this dollar exceptionalism to last at least into the first half of next year. As you said, we're actually trading in an environment where we are expecting the perfect storm. Okay, so you're saying tariffs are coming. This is going to be bad for the rest of the world. The dollar smile should help dollar exceptionalism. Looking further beyond, does trade uncertainty then materialize into actual further dollar gains? We don't think so. We're looking for a kind of a reversal in dollar strength towards the end of the year, so 110 in euro dollar, for example. Yes, and that will probably be on the basis that, yes, there will be some of this frothiness taken out of the market. You know, we've got the whole story about government shutdowns. We're worried about the US fiscal situation, and I think that's going to come into sharper focus in 2025.
We know that Trump wants a weaker dollar, essentially. What we also know is that he has warned the BRIC countries against setting up a BRIC currency. What do you make of the whole debate about de-dollarization? Is there any credence, anything of importance here?
Well, this has been, admittedly, this has been quite a strong theme amongst our investors, and we've been talking about this for a few years now. De-dollarization has been going on, but at a very, very slow pace. Now, the key question is, what is the alternative? How do you move away from the dollar to a broader bifurcation of currencies? We don't see that happening. Admittedly, if you look at the latest IMF data on reserve currencies, the share of dollar as a reserve currency has fallen, but it's not gone to the benefit of other currencies. What is the asset of choice? It's gold. You see a lot of central bank buying of gold at the moment, so that's the asset diversification. Will we see de-dollarization next year? We don't think so. We think it's more of a stealth move. It will happen at a very, very slow pace, but we're not concerned about the dollar being usurped as a reserve currency.
I've got 30 seconds before I move on. Euro dollar 110 end of next year. Actually, what about parity before that?
I mean, the risks are there. We've got a lot of significant event risk in Q1. We've got the French budget situation. We've got the German elections. We've also got Trump coming in as president, whether he starts to enact some of the policies straight away.
He's already spoken this morning. Literally, as you've been on air, there's a comment, basically him saying, I believe this is on Truth Social. Is that right, Mike? Trump says, told the EU they must make up their tremendous deficit with the US by large-scale purchase of oil and gas. I better move on. You're going to stay with us after the break as well. What is coming up on our show? Oh, I'll tell you what's coming up. Our US colleagues will hear more words about uncertainty from various Fed members, I reckon. That's my guess. What do you think? Speak exclusively anyway, our US colleagues, to the New York Fed President John Williams at 1:30 GMT, followed by his colleague from Chicago, Austin Goolsbee. What a great name, Austin Goolsbee, at 3 US time. Karen.
And still coming up on the show, sterling takes lower against the US dollar in early trade after Bank of England Governor Andrew Bailey highlights the impact of the budget on policy uncertainty. We'll unpack the implications for Forex. That's coming up next. Plus, Emily Tan is in Macau as the region marks the 25th anniversary of its handover to China. We'll bring you more on that story later this hour. And don't miss our conversation with former Italian Prime Minister Enrico Letta. That's coming up at 7:15 London time. Welcome back to the show. If you are wondering what President-elect Trump is doing in the middle of the night, he's not sleeping. No, he's posting on his social media site, Truth Social. He writes the following: I told the European Union that they must make up their tremendous deficit with the United States by the large-scale purchase of our oil and gas. Otherwise, it is tariffs in capital letters all the way. So the first thing is, not the entire thing was in capital letters. Otherwise, it would have been very aggressive. The second thing is, Steve, isn't Europe already buying some of the LNG? We could buy more, of course.
Yeah, but
we're buying some from Qatar
the truth
and
matter
Norway.
Is, but it's a lot more expensive than getting it through a pipeline from Russia, and that was the original issue that Trump had in 2018 as well. Just to say that we're going to speak to Enrico Letta a little bit later on. We'll do that in about 50 minutes' time. He's done this enormous single market competitiveness report as well, which accompanied Draghi's report as well. So we'll come back to Enrico Letta in a few moments' time. In the meantime, the Bank of England kept rates unchanged yesterday in its final meeting of the year, leaving the deposit rate at 4.75% after data showed the inflation in the country accelerating to an 8-month high in November. Three policymakers, this is interesting, a lot of people going for an 8-1. Three policymakers, though, voted to cut rates, thwarting expectations of the aforementioned 8-1. Carmel Sharma joins us, of course, again from B of A, and he says that sterling's highs are probably in place for the year, with the burden of proof on UK data to challenge the dovish shift seen on Thursdays. I think it's called an MPC rather than MOPC, but whoever wrote that acronym. Anyway, luckily on the screen it says MPC.
Wasn't me.
No, it wasn't you. No. Yeah. I used to see some stuff that's written down. I don't read any of it. Carmel, what do you think about the pound then? You think the highs are in place, 127-ish, yeah?
Yeah, I think obviously the dollar this morning is in the ascendancy. Euro sterling looked to be the consensus short trade. For much of this year, we broke through 83, tried to get through that 82 level. I think, look, if you look at what the Bank of England said, it was quite unusual for them to effectively dismiss the labour market report and the average earnings data, which continues to highlight this idea that there is some uncertainty as to the true state of the UK labour market. That's the first thing. The second thing is, I think what they tried to do is inject some optionality into the markets. How are they doing that? If you looked at the move in UK Bank of England pricing, what effectively happens, they took out a lot of rate cuts for next year. So by injecting a bit more dovishness, what they're trying to do is to say, look, we're still on course for a gradual pace of rate cuts, as they said yesterday. We think that as a house, Bank of America thinks that they will cut in February, followed by another 3 quarterly cuts next year. But the emphasis here is that, again, uncertainty, but they need to keep that optionality in place that should we see a further downturn in the labour market, as they're now saying it's more balanced than it was tight, then they are ready to act.
That dovish tilt, what does it actually do to sterling positioning, which had been at record longs over the summer? And there was so much optimism around the economy, around the new government, and that has obviously fizzled to a large extent. So where do you see positioning right now?
Positioning, I think, is still long.
Should it be long?
I think it should be, because if we're going into 2025, Carolyn, with a fiscal stimulus package coming into place, right? We are going to see a boost to growth from the budget, so that should help. In terms of the whole tariff story, what you've got to remember is that the UK is probably better placed than most countries in terms of able to absorb these tariff hits to goods. We're a service sector-based economy, so that should insulate. The consumer remains relatively strong. We're not seeing significant slippage in the labour market. I think that's the key bit. We are going to get some rises in the minimum wage as well. So I would say that this is probably an opportunity for investors to wait for this dip in sterling to start reloading on long positions. We're bullish for sterling next year.
We've been running a load of pictures of the war, and we've shown as well. Rachel Reeves, I'm going to ask a really simple question here. Has this government screwed up in its first budget?
It's not for me to say whether they've screwed up.
Now, you can use different language to say that they've created challenges for their own back. How about that?
I think it's a reality of the situation that a government needs to rein in its fiscal spending. Sure. And if you look
by creating growth was their mantra.
Exactly.
And have they actually thwarted themselves at the first hurdle by failing to galvanise the UK private sector to create growth? Because we know full well that a government can't create growth on its own.
No, it can't. But I think what they're trying to do here is that they're trying to redistribute income. So the part of the budget's narrative
and that's great. And I want more nurses, policemen, judges, what have you. But what I also want is a growth scenario to pay for it.
Right. So the other part of this, and this is my kind of secular bullish story to sterling, is that what you're now starting to see is a more active dialogue between the UK and the EU. Any economist that talks to the Chancellor will say, if you want to open the taps on growth, you need to reduce these non-tariff trade barriers with the EU. And this is one of the biggest challenges I think that the government faces next year. If they can achieve that, and you're hearing about allowing under 30s EU citizens to come in. And
good people like me.
Good people like you, of course. And allowing them to come into the economy.
I'm 2 times 30 than 30.
That may help the growth situation. Remember, the challenge is beyond 2026. This is where the OBR says that the growth outlook is a lot more challenging. For the next 2 years, if we do get the growth delivered as they say, plus that fiscal stimulus, I think the UK is pretty well set.
That's a very optimistic view, though, isn't it? In the meantime, what the market squarely is focused on is potentially debt sustainability.
Absolutely, but this is, if you look at the reaction in markets, we had that move higher in UK yields. We had the widening out between the UK and its G10 peers. That's now kind of fizzled out a little bit. I think this becomes an issue when we have a broader focus on debt sustainability. You saw some of this coming out in Australia earlier this week with the budget. You've seen it in France, obviously. If this becomes more pervasive, obviously tonight's commentary coming out from the US, then I think the pound is obviously going to be in for some challenges. It's all about the dual deficits, large current account deficits, large fiscal deficits.
I'd like to keep you for the hour, actually, but you've probably got other things to do, like getting your Christmas shopping. I don't know, not that you can do that at 6:30 in the morning. I've got a big segment coming up with Lynn in Asia in a moment about the BOJ. Can I just confirm something?
Yeah.
Japanese inflation is now nearly 3%. So it's now nearly 50% above target, which is 2%. We know that the wage round this year was 5%. It could be similar for 2025 as well. What on earth are interest rates doing at 0.25%? And ergo, what does that mean for the currency?
So there's 2 things here. First of all, I think Japan is still caught in what it has been for a while, the classic liquidity trap. You're not seeing Japanese savings rates coming down to be translated into strong consumer spending. So that's the first bit.
Because they're getting older. And they don't want to spend more. They want to save it because they're worried about their retirement.
Admittedly, it's a demographic story, and that's been a strong story for much of the last decade or so. Yeah. The second bit, I think, is also Ueda-san yesterday commenting on waiting for those wage negotiations in March. Perhaps gives the Bank of Japan and the Japanese government some time to assess what the new Trump administration means in terms of the whole tariff story. So I think, again, optionality is being injected for the BOJ as well.
I better leave it there because Caro's gone over on this segment. So
again. Can I ask you about?
Oh no!
Let me pull Steve Sedgwick here.
Good luck. We're 4 minutes over. Go on.
Carry
because of you.
Remember, August, carry trade, big drama.
Yes.
How much of that still needs to be unwound? 30 seconds.
I think potentially with the with a lot of good news in, I don't think this is going to be a here and now story. I think the risks are in the second half of the year, which is why we're slightly more bearish on the dollar, that if the positive growth story, the positive impetus from the US labour market starts to fade and the market starts to price in more rate cuts, that's when you could potentially get a squeeze and carry.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.